Hello and welcome to Macros with Mythili, the ET Now show that takes a hard look at all the major macroeconomic issues and developments in India and overseas. Well, among the many issues that are the bone of contention between the Reserve Bank and the government, two are so technical and complex as to make it almost impossible to do justice to the different aspects and issues at stake in a television debate. One is the RBI's balance sheet and the other the issue of a separate payments and settlements regulator. Nonetheless, in this edition of Macros with Mythili, we are going to try and do just that, but we are going to restrict our discussion only to the latter, the payment system, and we are going to take a hard look at the pros and cons of having a separate payments regulator as against retaining the regulatory role with the Reserve Bank of India, an issue which perhaps impacts the ordinary citizen far more directly than the RBI's balance sheet. And to help me do that, I have with me three experts on this admittedly esoteric subject. Dr. B.K. Bhoi, former Principal Advisor, Reserve Bank of India, Monetary Policy Department; Naveen Surya, former Chairman, PCI, Payments Council of India; and Madan Sabnavis, Chief Economist at Care Ratings, who are going to break it down for you. So, let me welcome to the show Dr. Bhoi, Naveen and Madan. Let me start with you, Dr. Bhoi. Given that very few people, even within the Reserve Bank of India, really understand what the payment system is all about, for the benefit of our viewers, can you explain what do we mean by the payment system? What is its role in settlement of financial transactions, and why is this an integral part of the monetary and financial system? I know I have given you a tough job, so please take your time. I promise not to interrupt. Dr. Bhoi?
India's payment system, when we are talking about, there can be cash transaction, there can be non-cash transaction. India is predominantly a cash-based economy, but this situation is changing very fast. And non-cash transaction, when we are talking about, so we have to understand it under three segments. One is paper-based clearing system, paper-based payment and settlement system. Another is electronic payment and settlement system, and there are certain other new things which are coming up, prepayment instrument, prepaid instruments, then peer-to-peer lending. So one has to understand that this paper-based transaction is gradually shrinking, because people are now attuned to what is called electronic transaction. In the electronic transaction, there is a wholesale segment, another is retail segment. In the wholesale segment, we have RTGS, real time gross settlement, we have NEFT. RTGS and NEFT, the participants are banks, primary dealers, and also some institutions which are permitted by the RBI. These are systemically very important, because large value transactions are put through this wholesale segment, RTGS as well as NEFT. Now, these transactions covers a whole gamut of activities in the money market, in the debt market, in the forex market, and these are settled or cleared through CCIL, Clearing Corporation of India Limited. So, Clearing Corporation of India Limited provides a settlement guarantee. So, the participants in this wholesale segment, so they should have an account in the Reserve Bank of India, and there are certain other stipulations which are there. Unless they fulfill these requirements, they are not allowed in this wholesale segment, because these are systemically important. So, in the systemically important RTGS and NEFT, so one has to be very careful about allowing people to participate. Now, in the retail segment, there has been revolution during the recent period. Retail segment, so initially it was card based only, debit card, credit card. Now, in addition to debit card and credit card, people are doing this business through internet, through mobile. So, so they can sit at home, and in the pressing the button, they can be able to transact from their own account to other account. This transaction will take place immediately. So, immediate payment can be done, and this UPI, so Unified Payment Interface, is a kind of revolution that has taken place. Immediately there can be transaction between one account to another. The retail segment, transactions are many, millions of transactions, but these are not high value transaction, small value transaction, and participants are not only banks but also non-banks. So, non-banks, when they are participating, they are not regulated as strictly as the commercial bank. Therefore, there is a need for a regulation of this segment, may not be as strict as that of the commercial bank.
Okay, okay, you've really kind of summed up the whole thing very quickly, Dr. Boy. Thank you so much. Naveen, I'm sure you'll agree with Dr. Boy, and that he has in fact done a remarkable job of simplifying a rather arcane subject. Would you like to add anything about what the payments and settlement system is all about?
Yeah, a couple of points, Mythili. One, the whole origin of regulating payment and settlement system started by FATF membership of India, and that's how the act came in 2007. It got implemented in 2010. It was also part of BIS membership of the commitment for BIS membership of India. Now, one point which Dr. Ghosh kept repeating called systemically important payment systems. So, the global mandate was to regulate only systemically important payment systems. Theoretically, while most of the payment systems that we talk, whether the institutional, interbank, wholesale, they are all fine, and I think we are doing as a country great in that. When it comes to retail payment, that's where the challenge and the pain has been. When the act came, it simply empowered RBI to regulate all payment systems. Technically, they could have just regulated systemically important payment systems and kept the systems like PPI or very low value payment systems out from the purview. But from a credibility and knowing our country's status in terms of consumer literacy knowledge, they chose to regulate it and give credibility to sector. So it started as a good spirit, and I think this is how it started. So those are quick things that I would like to add in this.
Madan, your chance to go at the payments and settlement system, how it is the backbone of the financial system.
Yeah, I think that is probably the last part of any kind of a financial transaction. As has been mentioned, we're talking of all the important markets, not just at the retail end where we're talking of checks or remittance facilities at the individual level, but even in terms of, say, the capital market, which includes both equity, debt, as well as the GSEC market, if you're looking at. I think ultimately for all the transactions to actually materialize, you need to have an efficient payment system. And I think this payments mechanism which we have, which has evolved over the years, right from the physical clearing which used to take place at one point of time, now to the electronic mode where almost everything keeps getting done automatically. I think this itself shows the high level of sophistication which has taken place in the entire process of payments, and something which has adapted well to the kind of changing environment. So just as we went over to the electronic mode of payments, I think the payment systems too has moved in tandem, and I think we've had a fairly well developed and evolved system as of today.
Dr. Boy, it's good to know that we are all in agreement that the payment system is integral to the stability of the banking and the financial system. And since financial sector stability is a remit of the Reserve Bank of India, should it not follow that the payments regulation should also be with the Reserve Bank of India? But the fundamental premise of the Wattle Committee seems to be that the regulation of the payment system should be divorced from central banking, though it doesn't quite explain why, while the RBI obviously wants it within its remit. Is part of the reason because despite the fact that the headlines are made by the Sensex day after day, we are still a bank dominated system, and it is only banks to which the dictum of too big to fail really applies, hence the criticality of regulation being with the Reserve Bank of India.
India's payment and settlement system is important for mainly three reasons. One is financial stability. If there is financial instability, the first brunt has to be borne by the payment and settlement system. This will throw the indication whether the financial system is working well or there is something amiss or there is something wrong in the system. So immediately there is a need to respond. Central bank has to respond to the financial instability. Now that is a kind of firefighting that the central bank has to do, liquidity management, lender of last resort, or they have to come to kind of bailout program for particular institution. Here the coordination will take time. If coordination has to be done with somebody else, then financial instability issue cannot be resolved so quickly. That is one thing. Second thing, the transmission mechanism of monetary policy. Central bank implements monetary policy on a daily basis through liquidity management, and liquidity management is done through the payment and settlement system. And payment and settlement system, if it is under the control of somebody else, then it would be difficult for implementing the monetary policy. See, monetary policy, financial stability, so these are the two important aspects for which central bank would like to have direct control over the payment and settlement system. Particularly when non-bank participation is increasing, they may create problem more often unless they are regulated under the same authority rather than some other authority. Their priority etc. may be different than financial stability and monetary policy implementation and transmission.
Oh, absolutely. I couldn't agree with you more. Naveen, the fact is that the rise of fintech, we've seen a dramatic increase in the number of non-bank players. Many of you fear that the RBI as a regulator has been too conservative. So, how valid is their pleas, primarily coming from them, for a separate regulator who they feel might be more open to newer products, even though these might be risky from the RBI's perspective? Has the present regulatory system really come in the way of innovation, Naveen, so far at least?
There are two or three things. First, we as a kids can't get to choose our biological parents the same way we can't get to choose our regulator. So while that controversy continues, as an industry, I think our view always has been that how do we get the right people to regulate us? So the challenge comes, Mythili, that the real issue here is the retail digital payment, which has 80% plus physical cash transactions happening. And the general view that we have been working within regulators and RBI, we saw three major milestones being achieved. First, on RBI its own instance, they allowed non-bank to participate in payment and settlement systems with PPI licensing when the regulation started. Second, they allowed interoperability with IMPS long back, though it took them a lot longer to give a full interoperability and with UPI, which has happened recently. So the issue has been more philosophical one, that the payment, when you talk about as a subject, because traditionally it's been seen as a wholesale payment, check, interbank clearing, the risk required, and since that has been a banking function largely, it is seen entirely from a banking lens. The moment you come to a consumer side of a payment, where the consumer is dealing with the physical cash, which is a lot more powerful today compared to any other digital instrument. There, the moment you come, there is a huge anomaly in the way the kind of regulation that are put in, which is supposed to be for systemically important payment. If you have to regulate the same way the day-to-day payment transaction, which is more like a commerce than banking, we don't see the like of growth. Or if you have to move towards, let's say, 50% digital, we see there are a lot of diverse view and there's a lot of controversy and a discussion in name of risk management, in names of, let's say, being conservative for safety. I think that's where somewhere our fight is not about bank, non-bank. The general approach is that banks are doing it, why non-banks can't do it. The difference is that it's not about bank, non-bank, it's about physical cash transaction versus every other digital payment transaction.
Okay, but Naveen, you raised a number of very relevant points. But the problem is that even if you have small transactions, collectively they might become very large, which brings me to my next question, Madan. Non-bank players actually have been chaffing, in fact, Naveen expressed their views about RBI restrictions on the size and the number of transactions, etc. But as we are now seeing with non-bank players like NBFCs and earlier with the microfinance companies, when they find themselves in a tight corner, they want the RBI to bail them out. Similarly, with non-bank players like, say, mobile wallets, today everybody is happy with the convenience of, say, a Paytm or a MobiKwik. But tomorrow, if the regulator were to do away with these prudential guidelines that Naveen was talking about, and you find some mobile wallet has misappropriated your funds, would you be just willing to shrug off your loss? Or would you then turn your ire on the regulator and say, what were you doing? Why didn't you regulate them? Madan?
Yeah, exactly. I think when anything goes wrong, I think everybody goes back to the regulator and says, what was the regulator doing? And I think what the RBI has been trying to do is to ensure that most of these financial segments, which mean non-bank segments, come under its ambit, because in that case, regulating these segments also becomes easier. And the broader issue about saying that conducting, say, monetary policy, making sure that money supply is controlled in the way in which the RBI wants, happens because it has full control over all aspects of money, which translates finally into the payments system. So I think it is quite essential that there's not that the person, the entity, or rather the regulator who looks after the banking segment, through which I think finally all the payments do flow through, should be regulated by the RBI. There's little reason why we should be having a separate regulator for payments, because that will be creating different kinds of issues. And in fact, slightly to digress, I would say that even if we are talking of something like cryptocurrency, which the RBI has been totally against, just think of a situation where we have a new regulator who permits such kind of transactions. It will become quite horrendous as far as regulating the overall monetary policy goes. And I think most of the decisions which are taken by the Reserve Bank of India linked to the real economy would probably go for a toss in case we have a different kind of a currency coming in, a different regulator permitting it. So I think it does make a lot of sense for us to have the RBI controlling the entire payment system, since at the end of the day, I think everything comes through the banking system. And in case things go wrong, it goes back to the RBI, and the RBI has to take the onus for it.
So that really is the crux of the issue, that ultimately everything is settled through banks, which is why the banking sector regulator, which the Monetary Policy Authority, must have the final say when it comes to regulations. But I'm afraid it's time for us to take a short break, so please do stay with us. We'll be back very soon. Welcome back. You're watching Macros with Mythili, and I'm in discussion with three sectoral experts on the rather esoteric subject of who should regulate the payment system. Dr. Boy, the jury is still out on the issue of sectoral versus single regulator. But would you agree that even as there might be a case for a separate capital markets regulator, an insurance regulator, pensions regulator and so on, in the matter of the payment system, since it directly impinges on the stability and the infallibility of payments going through, without which you cannot really have a modern economy, it is imperative that this regulation must remain with the monetary authority, which in our case is the Reserve Bank of India.
So, we are definitely moving towards cashless society. It will take some time. We have to have a ecosystem where cashless transaction has to be promoted. Now, cashless transaction does not mean there is no settlement, all payment and settlement. So, when settlement takes place, it takes place in the banking system. When banking system is anyway, there is always an interface between participants as well as banking system. So, banking system is under the control and regulation of the Central Bank of India. So, we have to promote digitization. At the same time, we have to see that there is systematic development of the non-bank segment, those who are participating in the payment and settlement system. So, without creating some kind of disruption in the economy, innovation is a must, and the innovation has to be carried forward, and it has to be carried forward in a systematic way without creating disruption in the economy. So, in order to prevent disruption, these non-bank segment has to be under the regulation. The regulation may be somewhat different from the regulation that is necessary for the commercial bank. If they will be also regulated in the same way, probably it will be difficult for this innovation to take place. We would like to move in the direction of cashless digital transaction, and cashless digital transaction is a substitute for cash transaction, and there is an interface with the bank is very high. Your peer-to-peer lending, or in case of prepaid instrument, there is always an interface between the these service provider and the commercial bank.
Very true, very true. In fact, Naveen, Dr. Boy raised a very, very important point, because the fact is that despite the large increase in the number of non-bank players, when it actually comes to settlement, it has to rest through the bank, because even today you find that RTGS, NEFT, in terms of value, they are far more than the kind of retail payments made through all these cashless transactions. So, do you think there is a case for having a separate payments regulator, or dare I say, is this a bit to clip RBI's wings in some way?
Well, my view is that, see, we can keep debating that who should be regulating payment and settlement systems, and we can keep having it for next 3 years, because I know it's going to be an intense tussle between RBI and a government. My worry as an industry representative is that there are a lot of numerous things which has been discussed, and a lot of man hours has been spent in making this draft bill, which 90% of the content has already been agreed by regulators and the government, which has a lot of interesting stuff to drive digitization, to drive cashless, and to, when the Payment and Settlement System Act came, it already regulated non-bank entities. It's over 10 years now. It worked that time. It needs to definitely change. The reality is there is a zero fault or a zero settlement, let's say, dispute that has happened. There are 4 or 5 important things that I want to highlight, that if somehow our debate could be that how do we get, keeping this controversy of who regulates aside, and get the 90% out irrespective, because this bill definitely needs amendment. For an example, today a new fintech player wants to roll out something new, and if the policy doesn't allow, you can't do it. But the new bill provides, just like Singapore format, that you can ask for a new regulation, or you can do a sandbox testing on that, and then the appropriate policy can come in. The new regulation provides that the sum of the board member, including chairman, should be full time. Because this is a subject, like you said, there are numbers of players, there is a dynamism in the environment, you need somebody who's looking at it full time. There is interesting process that how would you make a law? How would you, let's say, compulsory give a right of hearing as a natural principle of justice to the player? How would you create a, let's say, some sort of appellate body? It may be someone else than a SAT, since they focus more on securities, but some of these fundamental provisions, how do we get focus that we get that 90% out irrespectively, rather than fighting on that 10% that who controls? Ultimately, it's the key, it's the board members, whether it's brought by RBI or government. It's a quality of them, and I'm not saying that the current people are not eminent. It's more about understanding the subject, understanding the need of the sector. And like you rightly said, they are large because our country needs large number of players basis the inclusion, and they need to be able to work on a very small ticket size kind of transaction and make it feasible. And the current regulation can't create that sustainable environment at the current compliance norms.
Okay. Madan, I think Naveen raises a very, very important point that you need to get 90% of the bill, which contains a lot of good things, out. But the problem is that the draft amendment that the bill proposes, it has a provision for a separate regulator for payments, and that really is the bone of contention, as I said, because the government says, in fact, in the bill, draft bill, it says the objective is to foster competition, no dispute, consumer protection, no dispute, systemic stability and resilience in the payment sector. But if you were to prioritize these objectives, would you not agree that systemic stability must override everything else, and hence the payments regulator must necessarily be part of the monetary authority? So, even as you promote competition, innovation, ultimately systemic stability is far more critical for the country as a whole. Madan?
No, I fully agree with you there, because I think systemic stability is most important, because we have seen in other countries also that when this kind of a stability develops fissures, I think it has more deep implications for the rest of the system. And therefore, when we are talking of the Reserve Bank of India being the monetary authority, which has control over maintaining financial stability, I think this was a remark which was made initially also earlier. I think it's quite imperative that the RBI should be the sole regulator out here. And besides, the thing is that it has worked very well so far, so there is no reason for us to think that there should be another regulator coming in. And I think in case there have been problems, then probably they have already been sorted out. So it's not a case of saying that the system has failed and therefore we need to have, because of regulation, therefore we need to have a new regulator. And while it is true that there are a number of examples of countries where we have separate regulators, we also do have examples where we have a single regulator. But I think from the point of view of both financial stability as well as monetary transmission and conduct of monetary policy, I think it should remain with the central bank, which is the RBI.
Can we go ahead with 90% of what is contained in the draft bill and set aside the issue of who will regulate for now? But is it really possible for us to do that? Can we move ahead without deciding this very fundamental issue of who should regulate? Because that is critical to the entire issue, isn't it not so, Naveen?
Well, I don't agree that it is so critical. It is more of a personal issue between the government, let's say individuals who are driving from their side and RBI. From an industry perspective, it's very clearly that, like you mentioned, 2 or 3 things. I think the assumption is that we need to create more protection for a consumer. I think we've always been saying, as the bill provides, that it should be a risk-based framework, right? So risk, one of the consumer money is one of the risk, and I think somewhere we have to look at the track record, and nobody is disputing, including the industry member, that there shouldn't be a risk framework to protect consumers' interest. In fact, we have wholeheartedly supported 100% escrow with the bank. The only part we contested that why bank, why can't this money be with the central bank? So the question here is that the indirect question will come that central bank may not want to deal with, let's say, hundreds of entities. But the question is then, if you're going to work with the player who is superior to you, who is likely to be your competitor, because indirectly by holding a escrow, every information about what transactions are happening by that non-bank are visible to bank, but it's not vice versa, while they are competitor in that payment business. So there are some interesting twisted here, which needs a very rational, independent view. And I'm not saying RBI doesn't do it, maybe it takes more time. Ultimately, traditionally, and let's not forget, you mentioned about a word competition. It's not even about bank versus non-bank. It's about handful of banks versus everybody else. Today's payment and settlement systems, especially on the retail side, I'm focusing retail, which is about $250 billion a month, is 90% led by, let's say 8 or 9 banks, not even entire banking. So there are challenges there, why it is so. While we know that the payment market is still not matured. So there needs to be done things which are very differently. So we are talking here about a thought process which is put it into a bill. Can we keep this, while this debate can continue, why, if government and RBI both believes in these principles, which is in interest of consumer, of our less cash society and industry, why not implement that upfront and say we give ourselves 6 months to resolve rest of this matter as to where should it house.
So can I ask you a very direct question, Naveen? Would you be okay if RBI were to continue to regulate? In the interest of saying moving ahead, if RBI were to continue to regulate, that part is kind of left with the RBI and the rest of the bill is implemented. Would you be okay with that, Naveen?
I think whoever regulates with rest of the changes in the bill, we are fine. And the only point that we have is that in the PRB, it's not about who nominates, it's about who is coming in there. How do we make sure that the person there are deciding in interest of only consumer protection and growth of the industry and keeping the competition point clearly in their mind and take a very unbiased rational view. That's what we want. As long as the right person who can take those decisions on a right timelines, I think we are fine, whoever regulates.
That's a very reasonable position to adopt, and I do hope the government also adopts that, because Madan, I'll give you the last word. Do you somehow get the sense that are we going slightly overboard to accommodate non-bank players, particularly credit card players, Visa, MasterCard, etc., which have dominated the market, and suddenly now see that, they don't have as much freedom as before. Do you somehow get the sense, or am I imagining things, Madan?
No, actually, you have to remember that at one point of time, if I go back, say 20 or 30 years, it was only the banks which completely dominated the entire financial scene, including the payments mechanism. And now suddenly we have realized that we have other non-bank entities also coming in. And I think that's what's added to the complexity of the system, which has raised this whole issue about who should be regulating it and whether it does contravene other kind of objectives of the central bank when we're talking in terms of a different regulator coming in. So I think with these kind of complexities, I think we need to bring about these kind of the necessary changes to ensure that things are smooth. And I would tend to agree that most parts of the bill is something which can be accepted. The regulation part, of course, should still be left to the Reserve Bank of India for the time being.
Okay, it's great that all three panelists have agreed on one very fundamental issue, that ultimately regulation of the payment system should be left with the Reserve Bank of India, because what is clear is that only on this particular issue, which is causing friction between the government and the RBI on the issue of payments regulation, perhaps government needs to step back a little and let the Reserve Bank of India continue to handle it, of course with an open mind and greater openness to innovation, etc. And there's really nothing to be gained at the moment by separating it from monetary functions, and possibly there might be much to lose. Thank you so much, Dr. Bhoy, Naveen and Madan, for joining me in this discussion and making sense of a very, very complex issue. Thank you also for watching. Remember, we'll be back next week with yet another edition of Macros with Mythili. Till then, thank you and goodbye from all of us at TT Now.